Hello again, my friends. Welcome back to the Dividend Dive. It's that time again. It's Sunday night. We're all together. I hope this is broadcasting out to the world. Recently, I just started investing in penny stocks. I don't know. It seemed to make a lot of sense. Hi. Welcome back. Shannon, you're right, man. This week flew by. They say the older you get, the faster time flies. Guess it's true because, my God, I feel like I literally just hung up with you guys, played you the Pee Wee outro, and all of a sudden, just like snapping your fingers, right? Easy as that. You're right back here. So, yeah, Pat, what's up, man? Thanks for responding to the newsletter. And it's no, dude, that's not my retirement phases. That is Bill Perkins from Die with Zero. I highly recommend all of you read Beg, Borrow, Steal, get the audio book. You can, if you're in the United States and you have a library card, you can get Hoopla or Libby. I love those apps. You get free audiobooks. Yeah, they don't have everything, but it's pretty close. You get free audiobooks and Die with Zero. They got it on there. It's probably on YouTube, I would guess. But yeah, the whole thought with that. What's up, Matt? What's up, Kevin? Got a full house tonight. My God. Nathan, Fast Eddie, CBB Cave. No, CBB Cave. Fun one, man. Just that little, I don't know what that's called. If anybody knows what that's called, put it in the chat because I don't know. I can't even find it on the keyboard here. But what was I talking about? Oh yes, Pat, the Die with Zero. So he mentions that when we retire, when we get old, right? And I always say, like, someday I'm going to be really old, like over, 30. But when that day comes, when you're in retirement, you have your go-go years, meaning you're freshly retired, you're full of vim and vigor. What is vim? I don't know. But when I was a kid, I remember people saying you're all full of vim and vigor. Maybe it was some kind of strange drink that people back then had, and that's why they're all goofy. But you have your go-go years. Now I'm goofing around and messed myself up. You have your go-go years, and you can do stuff quick. Like, you're still spry, you stay able to move, but then you get a little older, and it's a little bit harder to move around. Things don't work as well. Um, every year things get a little bit lower. You're still the same person, just everything's a couple inches lower. Those are your slow-go years. And then you got your no-go years when you're Charlie Munger and you're a multi-billionaire, almost $5 billion net worth, but you're 99. What are you going to do? It's a pain in the ass just to leave the house. So he's not going to go climb a mountain. He's not going to go deep sea fishing anymore. So those are your no-go years. And when you hit the no-go years, man, that's kind of it. So, anyway, Pat, yeah, you're in your go-go years. And Pat was telling me about, hope I'm not getting into trouble saying this, but you're going to flip the switch and have to start pulling money from your dividend accounts and spending money. And they say for a lot of us, like me, that's a hype. I guess I'm not a hyper saver, right? 34%. When you start saving too much money all the time, year after year, it becomes such a such a hard habit to break. And it's just, they say, very difficult to just one day just flip that switch to say, I'm going to go from saving crazy to just spending a lot of money now. So we'll see. We'll see. Yeah, Matt, what's up, man? What's up, Matt? What's up? I guess you guys are the super fans. I can't do it all the time. I know I have the accent, so I try to take my accent and turn it up to 11 to where the knob breaks, and I don't know. Isn't that a weird thing? I wonder if people in Boston do that have the Boston. Yeah. Let's go. Let's effing go. Oh, dude, I still got my hoodie on. Have you guys noticed? Next time, I don't know what the psychology is behind this, but I pop in other, I don't know if Kevin is here. He wears the hat, and it reminds me of Indiana Jones, so I call him Indiana Burgess. And Ryan Williams. Next time you watch Ryan Williams live stream and he wears a hoodie, he ties his strings in a nice little bow. Mine gone. As soon as I get a hoodie, I can't show it. Just they go. They gotta go. the whole thought is, when am I ever going to need to put a hoodie over my head and pull the strings tight? Like this guy. This is what we're talking about. See, my kids, for whatever reason, we cleaned out their closets and they got this Banana Man. I don't know what Banana Man is. They like put him on your live stream. This is what, when am I ever going to need to do this to myself? Never. So the strings go. Thank you, Banana Man, for demonstrating so wonderfully. Don't get too close to that candle. Might light yourself on fire. It's like buying those penny stocks, right? It's like people trying to light their clothes on fire to keep warm. It's just a no-win situation. It might feel good for a minute, but anyway, what are we going to talk about? Let us know in the chat off to the side or below, wherever it is for you. I don't know. Some of you watch on your TV. I'm thrilled, pleased as punch. And me and Banana Man here, we enjoy that. So, love the vids with Stan when they review that. I missed. What did you, oh, yeah, we're going to do it, right? I don't know if it'll be on my channel or on Ryan's, but when the reconstitution happens here in about 2 weeks, maybe less than 2 weeks, we're going to have Stan on. We'll talk about it. We'll do a live stream that night. Yeah, whether it's my channel or Ryan's, I don't care. I'm just happy to be part of it and talk with you guys. So, yeah, Craig, SCHD Stan, he is a good one for that. I don't know what Ford out means. What did I miss you guys talking about? I don't know. Let's see. Oh, John wants to know, am I rebalancing my portfolio at least once a year? No, but I did do the big rebalance that I talked about on a couple videos ago. And of course now, right? The whole market was just waiting for me to make that switch into the S&P 500 because I had a Vanguard value fund, VVIAX, and it's predominantly value companies, right? Value stocks. So not like your Mag 7 and all that. But there it goes. I heard the accent a little bit. So I was very heavy into value and not so much into, I think what were we like 63% maybe into value, and then 30, yeah, like, oh yeah, it was 63 or 5, and then 30% into the S&P 500, which is a dimensional funds, which is offered by our 401k, DFUSX. Remember, when you see that X, it means it's a mutual fund. So it's probably going to be in your 401k. But DFUSX is that equivalent of the S&P 500 that I can get. And it was too much. And then we also had 5%, a little bit, 5% in a mid-cap fund, right? Because there's a lot of analysts that have looked at mid-caps underperforming for many years. They say, hey, mid-caps are going to have their day in the sun. So we like that exposure into mid-caps. So anyway, I rebalanced to be 60, right? Percent, 60, 30, 10. 60% into the S&P 500 for my 401k, 30% into the value stocks, DFUSX, and then Fidelity. It's a Fidelity mid-cap fund, 10% into FSMDX. And I know it's like alphabet soup in my mouth. Yeah. And we, sorry, my kids, does anyone eat Kashi? Because they were joking around with me, and I know you can hear with Kashi Go. It makes you go, I guess. They said, so they wanted me to eat some Kashi Go before I live streamed, because the joke being, right, then he's going to have to go. So, bunch of clowns and jokers I live with over here. Yeah. Oh boy. Hey, how about that voice crack shout out? So that's the rebalance we did, and that's in our 401k. And SCHD, if that's to me, John, yeah, it's doing it. It's my second largest holding, not overall. I don't have I should have did the image, but if you watch the video, you'd see. Yeah. God bless Banana Man. Mark, you rebalance your portfolio on Christmas Eve. Christmas gift myself. Can you tell us what your rebalance is? Like, what is your allocation that you're looking for? if you can share that. I mean, you don't have to do numbers. What's up, man? My guy Darth. Uh, I like it. We look at Dan. Dan's just stirring the pot. You know, I guess to each their own is what I'll say. Like Darth, I think he has actually, right? We were texting earlier in the week. You've I think you've moved away from the yield max funds, but I want to say it's a lateral move that you did. So, like a Netflix one, not Granite. What is it? But I looked at it briefly, buddy, and to me it looks like they are. How did I describe it? Why do I got that? Oh, when I do that, does it do it? Crazy. I'm sorry, I got a big bubble with a. I know it's like I'm starting to tell you something. I'm like, what is that squirrel? But it looks like they run a collar option strategy, which means they sell a covered call and then I think they buy a cash secured put or they sell a cash secured put. So you're limited on the upside and the downside because it'll be favorable um, if it goes nowhere, I guess is really what's good. But it looks like they got treasuries that they're using as collateral to take leverage out. And dude, it's just I've tried to understand them where they're getting that really juicy yield from, and then I know they also mix a return of capital in there. And I do believe, Dan, you're this is your thing, Dan, right? When you have a return of capital, it's not taxed, right? Because it's essentially you getting your own money back. But why do we want to get our own money back? That's not why we're investing. I think we want to invest for a return on capital, not a return of capital, if that makes sense. So, look at this. I guess you're trying to put an Iron Workers Union Vanguard fund here. Recently changed yours to VWUAX growth, and so yeah, can't speak Vanguard funds. Right as I was coming on, my mother texted me. My mother texted me about she's opened up a Vanguard fund to everybody. Um, Vanguard account, not Vanguard fund. But yeah, that's cool, man. Nice, Gabe. And dude, I haven't seen you before. I remember a lot of names, and I don't believe I've ever seen you before. So, that's cool, man. And I was talking to my wife about it. Like, I understand in this YouTube game that I'm gonna be behind. I'm learning. I'm sharing with you guys. Not an expert. Not financial advice. I don't have. I didn't even go to college, right? But I can still learn something. At least I'm confident knowing that I know more than somebody that's on day one. Yeah. I was telling her how Professor G, Nolan Gavaria, his channel has grown. The other Professor G, because Scott Galloway, I think, was the first Professor G. But his channel's really grown by leaps and bounds. But he is a college finance professor. So he's playing a game that he has a leg up. Mark Hussein, you guys see him around. Same thing. Like they have. So if I were to tell you guys, if I were, I should have hit the dump button. If I were to start a YouTube channel on something welding related, on tools I use, on technique when I'm welding, on, you know, vertical welding on steel that's kind of corroded but not eaten all the way through, and you have to fine tune the welder. Like on that, who are you going to listen to more? Like me, when I can say, hey, I've been welding for 26 years. Let me show you this. Or you get Professor G. It says like, I've read about welding. I watched a few YouTube videos, and I touched a welder in Home Depot. It wasn't on. You know, who you gonna listen to? So I know I'm taking it a little bit. I don't know. Anyway, so I'm so happy to have you, man. And I don't know. I like to do content for not everybody, but keep it in the realm of dividend investing and passive income, and how I'm using that to almost create like another just pension, like another income stream in the future. So, sure. I don't know. That was going to be an end there. So sometimes the brain just jumbles a couple words together, and that's what you get. What is Nexstar at price? I think we left last when we visited Nexstar. I guess it's mid 160s. 169.15 is what it closed at. So yeah, hey, look, we'll do news in a minute. We'll talk. If you guys want to look up something, I'll share thoughts on it. We'll look on Simply Safe. I only know what I know, and what I don't know, I don't know. So I'll let you know. I'll let you know. Shout out to my daughter and this mug she made when she was a little itty bitty baby cheerins. All right, so Darth, you did sell Yield Max stuff. Okay, good, man. What was your total return though? I don't know if I asked you that. Was your total return positive? Because I know a lot of those Yield Max funds, they did not beat like the correlated asset. So like TSLY, dividends included, total return, it still hasn't beat Tesla. That's right. You're in the curve funds. Gotcha. Um, yeah, I think Jeppy and JepQ, I've never really dug into those, but I believe that they own the underlying assets. I think. Somebody correct me, put it in there if I'm wrong. I think they own the stock. Like I know DIVO. That's why I liked DIVO because Kevin Simpson, who runs that over there, they own the stock outright. And he only does covered calls when it makes sense. So you can get fluctuation in the income, but and this you are responding, Dan, to my question about return of capital. You lower the cost basis, so you're deferring taxes, not reducing them. Okay, that makes sense. Thank you. QQQI. I have not, but my guy Harris from One Penny at a Time podcast is buying QQQI, and yeah, I don't remember. Maybe we could. There we go. So I got my pen ready. We will start writing down with some of the ones you guys want to look at. Darth share those thoughts. Yeah, Dan, I'm with you, Dan. And I've said I'm skeptical, but hey, it's other people's money, and I can't stop them. Just like Darth, when we were talking Friday, was it, with the shouting match Trump and Zelensky got into or whatever? I was like, you know what? If it puts companies I'm invested in potentially out of business, then I'll pay attention. But yeah, it could be a little rocky here, and I don't know. Will it lead to World War III? God, I hope not. But there's very little control over them yelling at each other, I guess. So I didn't really pay. I'll pay like 5 minutes of attention, but I don't get all wrapped up into it. And if there's anything not, I guess, imminently threatening to where I am and how I live, then, I don't know. I know we could go down the slippery slope here. I don't want to get into politics, but yeah, I appreciate that, man. And Gabe, I'll really, here's how you get rich. This is it in a nutshell, Gabe. Number one, you have to underspend your income. And two, you have to invest it or invest it with somebody or some entity that will be able to make your money grow. And like that's it. It's really two steps. And of course, there's tons of nuance, but Warren Buffett even says you could really just buy the S&P 500 fund, which is the 500 top companies in the United States, roughly. And yeah, it self-cleans, meaning that it's market cap weighted. So the companies that have the bigger market caps, meaning when you take why can't I think of it? You take the shares outstanding multiplied by the share price, right? Get your market cap. They get different weightings in the portfolio. So when you get the big names, the big get bigger, the strong are toward the top, and the weak fall off, the dying companies. So Warren said you could just buy that and you'll be fine. You'll be exactly average with the market, which, right, is like 9% a year. You hear everywhere from like 7 to 10%. Some years will be down, some years will be way up. Like we've just, I mentioned it in the newsletter with Howard Marks talking about in 2023 and 2024, there's like 22 and 24% ish, 23, low 20% return. And the last time we had back-to-back years of that high was right before the dot-com crash. All right, Matt, we will look up for Matt. Let me write this down. He wants to look up Sherwin-Williams. So we'll get a couple here. Oh, this guy. Wait. Oh, Dennis. Yeah, you did. We talked about this last week. I remember. Hey, who wants to talk about late 1990s and early aughts, I guess, quasi-obscure punk bands that I love? I'm all about it, but nobody else is. So I like that. It's a good album, man. It took some getting used to. The Pep drop. Did they drop again? I kind of lost. What did they let me just see real quick. I mean, we could look them up, but to 153. They haven't dropped that much. I mean, they're kind of flat, man. They went over 155, but if you want, we can I don't know, see real quick. I don't know. They'll be okay, I think, but um yeah, as far as PepsiCo, man, they're going to be okay. I think I was reading about the GLP-1 drugs and how companies what do we always say? It's been a long time since I've said it, right? Companies are living, breathing entities, and their first order of business is survival. So they're going to do what it takes to survive. And a lot of companies, I hear, what's going to be coming down the pipe, the pike, the pipe. No, the pike coming down the pike and the pipe. Jeez, it's throwing my brain into a knot. I know that dividends are good. When we focus on investing, it keeps us, me at least, off the pole and the pipe. Dual benefit. So these companies are going to be having smaller portions because if people want to be healthier, that's how they're going to get you. They're going to get you with smaller portions. So, Alan, I have been, my man. I've been well. I'm starting this when I started what I do now, which was September of 1999, is when I really started learning and getting into it. But technically, I did get to weld briefly while I was on fire watch for some shipyard workers in 1997 when I was aboard the Stennis in Norfolk, Virginia. That's how they say it, not me. If you listen to radio out there, I know some of you are out that way. There was a rock station, and they used to do that. You're listening to 98.7 Norfolk. I was like, damn, they get away with it on the radio. So there you go. That's how you can swear and not swear, I think, because I'm talking about a place. I will get a couple more here, and then we'll go. Frank wants RSG. RSG for old Frank. What'd you change? You had like Bogart or something in there before. Yeah, you like DIVO2. I had sold it for a while, but or I had held it for a while ago, but then we sold out of it. I think it was just I just wanted more SCHD, and maybe I could see myself getting back into it in the future, but I like it because it's a lot more conservative. Kevin Simpson has a really great book called Walk Toward Wealth, I believe is the name of it. And he gets into a little bit of his philosophy and strategy about how he likes to write covered calls and cash secured puts. So we won't get into all those, but so you treat your portfolio like, I think I asked you if you have if you would share with us your balancing. What's your balancing act, man? What do you rebalance into? So you look at stocks that have 5 years of dividends, keep the top half of your stocks and redo them. Oh, so you are answering me. If I would have just read your comment, Mark. Anyway, you keep the top half of your stocks and redo the bottom half based on growth. So I guess it wouldn't be like a dogs of the Dow, I guess, but minimum 100 shares sold ABR. Yeah, what happened with ABR? They got a dividend downgrade. All right, so let's do, I think we can do news, and then I'll take a break from you. Oh, as sci-fi, they would say frack. That's funny. All right, here we go. Oh, I don't know, man. We'll see. We're already into it. I'd have to mess around and send the link, and next week I'm gonna get into news, and yeah, I got news and a couple stocks to look up. So let's do that. Let's do news. There's a bit of news, everybody. So for those of you that are new here, this is where I take you along. Oh, Paulo, do I think March will be bearish? No idea. I hope so, because I'm not in retirement yet and I'm not living off of dividend income. We should, I guess that's self-indulgent, but apologies to everyone on fixed income that's retired. Those of us that have a lot of years of investing ahead, you should want a full market crash, because the cheaper you can buy things at, the higher the growth potential, and you're also buying, lowering your risk profile on those stocks, your margin of safety, right? So the cheaper you can buy something, the less money you're risking. So yeah. Um, oh yeah. Yeah. So Simply Safe downgraded ABR. I'll scroll back a little bit and show you that, but now we'll do. Now I'll take you guys like Mr. Rogers' trolley. I need that sound, right? Here we go. But let me do this. I always forget to. I want to give you guys more real estate. So let me scroll back. Yeah, here. So this is the one, Darth. Yeah, I'm sharing that. So they downgraded them to 40 because they said that the rates are higher. So Arbor's expecting to reset the dividend. And let's see if we can say where. Yeah, so Arbor sold off 13% because management warned investors that they will likely reset its dividends starting in the first quarter of this year. And Simply Safe is anticipating a roughly 30% dividend cut when it reports in early May. So that could be a time to buy in, I guess. But this is what I'm talking about when I don't know how to think about floating rate apartment loans. There's a lot of, I just don't know, man. That's a lot of macroeconomics involved, and you get things like this. But yeah, I don't know. I would. What is this? This is the 10-year yield showing how it's up, up, up. Oh, this goes back all the way to 20. I'm sorry, I thought it was 2003. Anyway, I shouldn't do this. Talk to you guys and scan, but yeah, of course, with the cost of mortgages remaining elevated, management now expects a 10 to 20% decline in Arbor's agency loan production in 2025. It's just, I don't know, man. This is out of my wheelhouse. I've tried to, and then they think if you're a conservative investor, it's probably an uncomfortable stock to own. So there you go. And now they give you an alternative. They would suggest maybe the Eaton Vance Tax Advantage Dividend Income Fund, EVT. And then also a couple BDCs like Capital Southwest and SLRC. So that's what's going on with that. But anyway, so what was Monday? 24th, I think. We're going to have a lot to get here. So let's take a breath, and here we'll go race through it. As always, I'm learning to move quicker here so I can spend more time with you guys. So pause the video if you want to zoom in and look at the valuation on these. But Katerra raised the dividend 4.8%. They reaffirmed Flowers Foods dividend safety score of 62. Man, it looks pretty undervalued too. More packaged food company troubles. Home Depot, that was earlier this week. What a fast week. Raised that dividend 2.2%. Yeah, low raise, but honestly, they do grow that dividend pretty quick. So hopefully, inflation's 3%. So undercutting inflation by 0.08. Hopefully it's not going to put too many fixed income people out on the street. Sempra raised the dividend 4%. Texas and California Utility. Nice. They refreshed their outlook on energy transfer. All that this means is an outlook from Simply Safe. They don't have an algorithm, right? They have human beings. Check out their YouTube channel. I shared a post that Brian Bollinger did on Main Street Capital. I really enjoyed it. Very good video. Their channel needs to grow faster. There's no way that this channel should have more subscribers than Simply Safe. So that will come in time. But yeah, so they write an outlook. Lind, that's my industrial gas. That's my neck of the woods. Raised their dividend 7.9%. Getting there. They downgraded Diageo from 99 very safe to 90 very safe. So it's the lower bucket of that. And hey, I'm actually going to be helping them out at the conclusion of this live stream by maybe having one or two Guinnesses. So Diageo, ticker DEO, they own Guinness. and Johnny Walker and a few others. TJ Maxx, very solid company. My wife just bought some goods from TJ Maxx this week. So TJX raised the dividend 13%. It's a yeah, I like this. They are the treasure hunt strategy because you never know exactly what you're going to find there. So that's a wonderful business model. Just keeps people coming back because it's like, it's that treasure hunt, I guess. That's why I like metal detecting. I need to do that more. You never know what you're going to find. A lot of garbage, but I found some cool stuff metal detecting. General Motors elevated the dividend 25%, but it's still 60% below the pre-pandemic level. So, right, you want to get excited, be like, damn, 25%. Yeah, it's still below where it was pre-pandemic. Getting there. Allstate raised the dividend 8.7%. Looks reasonably valued. Excel, ticker XEL. I think they have the Excel Energy Center, right? That's where the Minnesota Wild play up there. Yeah, Hater up there in Minnesota. Eaton grew the dividend 11%. That's one Daddy wishes he had back and didn't sell out of. But yeah, I bought that during the pandemic because, as my friend calls it, the pandemic. I just saw him last night. The pandemic. I almost said it, and then I did say it. Self-fulfilling prophecy. They grew their dividend 11%, and they've paid a dividend every year since 1923. Good crud. Almost there, everybody. Dell raised the dividend 18%. Funny that they're still around. Becton Dickinson. This used to be Laxman Narasimhan, I believe. He was the CEO, the former CEO of Starbucks, who the predecessor to Brian Nickel. He was over here at BDX. So they are going to shed their bioscience and diagnostic unit, but the dividend outlook remains secure. A couple more here. Chubb, ticker CB, raised the dividend 6.6%. That's a Warren Buffett stock. And Old Republic, 9.4%. Just a slew of these. So thanks for hanging in here, everybody. I know it could be boring, but hey, it's a treasure hunt. You don't know what's going to come next when I scroll up. They've paid every dividend. They've paid dividends every year since 1942. And two more, I think. They refreshed their outlook on CIBC, the Canadian Imperial Bank of Commerce. Imperial. Every time I see that, I keep thinking of this. Well, here. Let me get them queued up. Shout out if you can put in the chat if you know what I'm going to say or show for Imperial. Couple more. L3 Harris, two more. Raised the dividend 3.4%. Looks way overvalued. And then lastly, Abbott got a dividend upgrade from 90, very safe, to 99, the highest safety score, because their improving financial profile supports strong dividend outlook. And you remember they spun out AbbVie, and AbbVie is now more valuable than they are. And for you, Matt and Frank, I'll look up really quick so you can get some idea on. Yeah, I already know Sherwin-Williams is on my watch list. It's one that I watch. You know, if it came cheap enough, I'd buy it. But 87, very safe. Very hard to disrupt them by AI. They've been around since 1866. I mean, all the robots are going to need paint, right? When Skynet launches, because else they would rust. Dividend growth, 46 years. They're on their way to dividend kingdom. 46 years of dividend raises, and they grow it very fast. I know people are like, but it's small. Yeah, well, hey, you hold it long enough, and that yield on cost, it gets up there. That's a good company. When are they going? March 3rd. So they are just at tomorrow, ex-dividend. They look the high end of reasonable valuation, according to SimpliSafe, and we won't, Matt, spend too much time on this. So pause the video if you want to look at any of this in depth. But yeah, super low free cash flow payout ratio. Free cash flow per share, although it's actually below where it was in 23 and in 20. So, but their earnings per share keep marching up. Let's see if anything else pops out. Sales growth, 0% last 12 months. So maybe that'll give us a break on the share price. And yeah, 254 million shares outstanding, which is not a lot. Looks like their revenues kind of gone stagnant since 23. So that could be, a portent of something to come. But yeah, all their margins are going to be really solid. Just a very solid company. Although they do have a little bit more debt than we like to see. So, um, yeah, Matt, I mean, they're solid. They get a very safe score, but I'd like to see a little bit less debt. And then, Frank, you wanted RSG. So let's throw that on and then I'll get back to the chat and, hook up with you guys, see what you're talking about. 0.98. Oh, not a one. That dividend yield has come way the heck down. Holy smokes. Oh, RSG. I know Republic Services. Yeah. Did I say Old Republic? Yeah, they do waste. They're a competitor to Waste Management. And Waste Connections, ticker WCN. We use Groot. Well, we don't have a choice. The village told us. They just said you're using Groot. So Republic, I think I've looked up them a while ago. Yeah, they're going to be another good one. Dividend growth, fast, 8.4%. They last raised it in July of 24, 21-year dividend growth streak. If you want that next dividend of 58 cents a share, you got to get in by April 2nd. Looks overvalued. So, yeah, I agree with that. I mean, this would be a solid one, right? Cash is trash, you guys are fond of saying. So they expect the price based on the 5-year PE to be 174 to 213. I know, thrilling stuff here, guys. Yeah, everything's just way overvalued. It looks like I would wait, man. You know, unless you're itching, just buy a share and sit on it. But, oh God, look at that. Free cash flow payout ratio and earnings payout ratio keep going down and to the right. That is beautiful. This, ladies and gentlemen, is beautiful. Look at this. This is what you want to look for, in my opinion. When the free cash flow payout ratio and the earnings payout ratio are going down, they keep growing the dividend really quickly. And then the earnings per share and the free cash flow per share are just stair-stepping up and to the right. That just looks really indicative of a solid business. Yeah, they're buying back shares. The total sales keep going up, although it was flat for a few years. I mean, just solid. Yeah, margins are all really, really healthy. Just, let's see their debt before I get ahead of myself. And the debt, it's modest, but they can handle that. And then when you see this net debt to EBITDA, say what you will about EBITDA. It's earnings before interest, taxes, depreciation, and amortization. So it would take not Waste Management, Republic Services, the last 12 months, 2.5 years of just the earnings before interest, taxes, depreciation, and amortization, which again, yes, some people don't like it, and I would agree. But it would take 2.5 years to pay off all the debt if they threw everything at the debt. So they can handle it. So yeah, anyway, let's see what you guys are talking about. And what do you guys think of that? Because sometimes I think it goes too long. And I don't know. I like you guys. I like chatting with you guys, but I also like to show stuff going on in the world of investing. And hey, it's put it this way. And also, because I'm not technologically advanced, when I show the screen, like we were just looking at, I can't see the chat. So I know there's probably a way to do it, but all right, let me blow through these comments because you guys were all talking about ABR. Oh, yes. Imperial Bank of Canada. I always think of this. I see Imperial Bank, right? The Imperial Guard from Star Wars. This, ladies and gentlemen, is from my childhood. It's a bank, and it's from 1983, I believe. I got that when I was a small little baby guy. I wasn't that small. I think, 5, 6 years old when Jedi came out. That was the first Star Wars one I saw in the theater. Shout out to all of you that saw it in 77. And if you are a Star Wars fan, check out the Smartless podcast. I don't mean to point at you people. Check out the Smartless podcast. It's Jason Bateman, Sean Hayes, who was on Will and Grace, and Will Arnett. It's funny. Good show. Mark, you saw it coming. Yeah, see, and I probably wouldn't have been able to see that coming. So that's, yeah, good for you guys. Okay. Oh, and you did. Look at, dude, Mark, do you work for Simply Safe Dividends? They should look into hiring you. Yeah, Darth, are you planning on getting out of ABR before they cut, which looks like it will happen? He sold Maine. You guys are talking about Brian from Simply Safe. Yeah, he did sell it. Been big on, I'm assuming you mean Abbott, ABB, unless something else. Pat, we'll see. I text occasionally. I got Brian's number and I text with him, and yeah, I don't know if he cares where I say. I was somewhere and I was gonna meet up with him, but it didn't work out. So, but yeah, and I love it. Hey, if that's so, there we go. Because he sold Maine, I'm not. I have no intention to sell Maine. I am officially under an adjusted cost basis of $30 a share. So, and I like or I'm almost at 29. I'm just above 29. I don't know ABDC. Oh, OBDC, is that Owl Rock? No, I thought it said ABDC. Yeah, Aries Capital. I still have Aries Capital. If you guys watched the video today, I shared the portfolio and Canadian oil and gas stocks. Yeah, I don't know, man. See, that's geopolitical. That would be interesting with the tariffs coming if that causes any kind of disruption to their businesses, man. Dell, Alan, I honestly, Dell is like those. So we went to a concert. I got veteran tickets, vet ticks on Friday night in St. Charles over here at the Arcada. There was two cover bands. It was Paradise Kitty, which is a Guns N' Roses all-female cover band, and the Iron Maidens, which is an all-female Iron Maiden cover band. So fun show. But before there was some kind of advertisement going on, and there was something for Engelbert Humperdinck. And I looked at my wife. I was like, wow, file that under the list of people that you thought were dead. That's how I feel about Dell. I remember Dell back in the day, the commercials, like, dude, you're getting a Dell. That must have been the 90s or early 2000s. I thought Dell died along with Gateway. Shout out to Gateway. That was my first computer I ever bought by my big self. And it came in a box that looked like a cow. It was a cow print box. What do cows have to do with computers? I don't know. Oh, what's up, man? What's poppin', Chet? So, oh, MPLX. So is that's like affiliated with Marathon Petroleum, right? Or MLPX? Because I hold MLPX, which holds all the MLPs, but the dividends are qualified. Yeah, MLPX. Okay. There you go. Thanks for the color, Mark. All red. See what I did there? Dell for the data storage abilities. They have coolant that will remove the need for fans and data centers. Unless that silicon photonics that we were talking about, where if they replace, it would be more expensive, but replacing the copper wire, because copper uses electricity, right, to conduct, and that generates heat. But with the photonics, you're using photons to transfer data. It's like light quick, and there's no heat. Everything can be air cooled. It's just room temperature from what I understand. So there's no heat generated. Yeah, thanks, man. We've been through this before, right? Yeah, MLPX is the ETF, MPLX is a stock, and MPLX is an MLP. If you're new, Gabe, and you're still watching, don't worry, man. Don't worry. I know. Ah, what's up, man? Maybe we'll get a chance to say hello. Merck, Paulo. Merck let's peep in at Merck in a minute here. Imperial Guard of Dark. Oh, that's funny. Yeah. Messed with Maine at 26. Yeah, I honestly look good to me. The BDC, it rhymed. I bought 150 shares. I had consolidated. I probably sold Microsoft to buy more Maine, which, hey, at least Maine is paying me. Yeah, is that mine? Do you remember, Andrew? Because I think mine's up there. Or is that yours? Is your main yield on cost 9.3%? No way, dude. You were, yeah, I was there Friday night. It was windy and cold as hell, but where do you bartend at? The Crazy Fox or something like that, right? I will do that, man. Email me, russ@dapperdividends.com, because we dig St. Charles, my wife and I. We like St. Charles. So, uh, yeah. Hell yeah, man. Tell me where, or I don't know, put it there. What's the worst that happens? I mean, you people in the chat gonna drive out and give you business, but Dello and Dell and Cisco are big in the business enterprise. Yeah, Cisco's been moving up. Nice, nice. All right, I'm getting close to being here. I love it. You got the so gateway computer boxes. Thank you for chiming in, Steve. Were designed to look like cows because the company, originally based in South Dakota, wanted to visually represent its rural Midwestern roots, a pattern of a Holstein cow. And that is funny because it's just always stuck in my head. And why I picked Gateway, I don't know. But that was when the you had to plug into the phone and it would make the noise. And those were the days. Use a Napster. I was conflicted about it, but I'm a music junkie, and I told myself I'm only going to use this for obscure live recordings, and then pretty soon I'm just downloading albums. I mean, it flipped to the dark side really quickly, and then Lars got upset, and they ended Napster, and then went to LimeWire. I think LimeWire was the next one, and then I think I just kind of gave up. But fun times, man. That was just the Wild West. Just do whatever, just downloading. But it did take a while. I remember I would queue up like dozens of songs and just leave the phone line all day and then just go to work and see what downloaded by the time I got back. Texas Pacific Land, right? Yeah, I have not looked at them. I know there's been a lot of talk about them. There's been some other creators that have mentioned them, but yeah, I want you guys to ask Ryan. Give it to him. I don't think he's on in here watching, but ask him why does he tie together? It's his style. I'm not hating. I'm not throwing shade. It's just not my style. Mine, I rip. I don't rip. I can't rip them. I have to. You have to pull them and then cut them, and then it sucks back up in there for all of eternity, never to be seen again. Uh oh, okay. You're talking about Discord or something. The guidance. Korean. Yeah. I mean, I Simply Safe is the Cadillac version of that, but uh I don't know, man. I mean, yeah, you guys throw in there. What do you like to use? Because I think you get what you pay for. It's tempting to try and find something free. Honestly, some of the brokerages do a pretty good job, but I don't know. What are you looking for? Like valuations, or you want um like what level of involvement? Because any brokerage will track your dividends for you, right? Oh, thank you, Andrew. You remembered mine because I'm like, hey, 9.3. That sounds close to mine. My brain's like, that might be yours. Ask him. LimeWire to download. Yeah. Oh, R.I.P. LimeWire. That was back in the day when I wish I was investing. Quite honestly, I wish I was investing. But yeah, back then I was downloading music and playing, surfing the internet. Guitar Tab. I used to love that. So I thought it was the craziest thing because I play guitar to get the sheet music for any song. I'm like, this is crazy. And then games. I remember playing a game called Myth. I was big into the Total Codex or something like that. Fun game. Yeah, it can be prohibitively expensive. I mean, uh, you can try it for 2 weeks. For free. Yeah, Stag, that I sold them because they did not use their or no, they didn't grow their dividend. Sorry, I'm thinking of two things here. Their dividend was kind of frozen. I mean, maybe they increased it by less than half a per. Hey, let's look, man. Instead of me just throwing out random things, let's check it out. Let's see, everybody, what Stag Yeah, there you go. Very slow dividend growth. I worked at one of their buildings up in Janesville, Wisconsin, and it was all right. I mean, it wasn't a complete dump, older building, but yeah, look at that's the problem that I didn't like with the dividend growth. It's just 1% over the last 10 years. They are in no hurry to grow that. I mean, they have been growing it for 13 years, but that's the problem with Stag. It's just stagnant, the dividend. But they look like they could be at a good valuation. From what I remember, current price 35. I don't know, I think I was coming up on 50, 60 shares. And I remember, I think I sold them at like 31 or 32. So that must have been 3 years ago. It's been a long time. So that stock has just really not moved. But yeah, that's Stag. I mean, I would just rather go with Prologis or let's see their debt. But yeah, you're right. I mean, I don't know if they low debt. I don't know if I'd say they suck, but it's just not what I'm looking for. Yeah, as far as dividend trackers, dude, what about Ryan's, right? Doesn't Ryan have his spreadsheet? I mean, I know you could do a spreadsheet. Yeah, Prologis. Well, dude, I work at a Prologis building almost every week. Prologis, Centerpoint, there's some CBREs, Link. I don't know. I know all and that's why I'm like, why don't I own more of these? Funny enough, I don't know what buildings Realty, because Realty Income has industrial exposure too. So yeah, you could always make your own, right? You could always make your own. Nice. Used to own a guitar. Well, what happened to it? Rexford Industrial. I think that the geographic risk there, right, with being predominantly in Southern California. I think that's the bugaboo with why they maybe sold off. Andrew, they got me again. I was waiting for under 100 with Prologis. I was waiting for under 100 and oh, Schwab noise when I have to oh, PCs. Hey, they want to make sure you're safe, right? So I know I go through it too, but honestly, when you think about all the history of the world and things that human beings have endured and gone through, can you imagine if we could, if we could literally there were people that had to they're trying to eat grass and tree bark to stay alive, and we're like, I have to keep verifying my PC safe. Sitting in a climate controlled environment, and you're like, look at all this food, like so much food, I'm fat. They're like, wait, your problem is you're out of the elements and it's warm in the winter and it's cool in the summer and there's too much food. Why are you upset? But my theory is that human beings, it's just ingrained in our DNA to be upset about something. If some people, I swear to God, if you gave them a garbage bag full of money, full of $100 bills, somebody would complain about how heavy it was, right? But, oh, that's right. He does have the investment club. So can't you still use his spreadsheet, or is that behind a paywall now too? I don't know. General Mills is growing that dividend, says Mr. Ortiz, right? GS? Or no, Goldman Sachs. GIS is General Mills. Sorry, Goldman Sachs, yeah. Yeah, PLD, I will eventually, man. I should have, but I was buying more Vici, and I think because I want to buy it in a retirement account because it's a REIT, and I had just enough to buy, I think, one share, and I was like, uh, okay, so Korean, you did use Ryan's spreadsheet. Cool, cool. Um, hey, Eddie, I still got this guitar. This is my Epiphone. That's why the headstock's covered, because I want people to think it's a Gibson. For those of you that don't know, that iconic guitar body is a Les Paul, a Gibson Les Paul. But for people that are cheapskates but want to look cool, like me, sound isn't anywhere close. I know I've played a Les Paul. Yeah, this is like a fraction of the cost of a Gibson. So here, I'll show you, Matt, real quick. We'll show you Goldman Sachs real quick here. Real quick. God, where does the time go? Zip, all the way to the top. Somebody just tuned in and heard that, and they're like, what in the hell? Yeah, 60 borderline safe. So shows they're overvalued, expected price, probably based on their PE. But anyway, you want to know what they were growing that dividend at. Oof, quick. 13% 20-year CAGR. They raised it 9.1% in June of 24. And they went ex-div on February 28th, so it just happened. But yeah, they look pretty overvalued. A lot of the financials have been doing that. So hey, anyway, without getting too much into them, so that's what that's growing at. Oh, I guess I still get some exposure to Prologis, but I see their buildings. The thing with Prologis, they they upkeep their buildings very well. They're like the white glove service. It's very rare that I will go to a Prologis building that is in poor shape. I mean, there are, believe me, there's property managers out there that Band-Aid, they will, I've been literally told when a tenant moves out and we have to do a rehab and there's other trades there doing things, they will literally say, what is the least amount of money we can put into this to make it acceptable for the new tenant? And then the new tenant comes in, it breaks, and they're like, oh, you broke it. You broke the equipment. You know, the dock door, you broke it. And we're like, it's hanging on by a thread. Like, what? Not Prologis. Prologis, when you get in with them, yeah, you're like, this needs to be done. They're like, boom, approved, do it. Get it ship shape. So Prologis is probably, I haven't looked into their financials. I would assume they might be a little bit higher rent. And now I'm thinking about it. I should ask some people that when I go to these companies that are tenants of Prologis. But I think you get what you pay for. You're just going to have a nicer space, and they upkeep their properties very well. And that's what I see from 26 years of walking around these businesses. So, oh, Bernard, don't worry, man. We love you. We love you just the way you are, too. So bullish the market. And right, Adam? Answer me, Adam. Don't you think we're going to need a catalyst for this market to start finally correcting and going down? What will it be? I don't know. It's probably something Trump's going to do. Who knows? He's not running for re-election, so he doesn't care. But for better or worse, I think we're going to need a catalyst, but it's going to have to be a strong catalyst to keep it down. Don't you guys think? Lately, these crashes and corrections, they're like flash crash. Even COVID, I mean, that's crazy how quickly it recovered. You got what they call it, the Nike swoosh recovery. You usually only post your buys in the buy. Oh, sorry, you guys are talking about Ryan's Discord. Yeah, man, I don't know. I can't get it down with Discord. I don't know why. I've tried. I have tried Kevin's and Ryan's. I don't know. You know, Blossom and X are enough for me. And then you guys in the comments here. Young Industrial REIT, LXP, giving them a shot. Ah, right. I know we're at the end of his, but I'm writing down LXP, brother. I am going to look at LXP and see what's going on with them. So, yeah, buy LXP to get substantial growth. And that's the thing. When you run into a realty income, they're so big. So big, it's really hard for them to move the needle and have new growth coming in, even though they're trying. They got the private equity fund. I listened to Realty Income's earnings call, but didn't talk too much about it this time. They did the last time. So, Jesus, look at you. 60 of you watching. And between us, I love it. I'll jump on to, why didn't the Windy City Comics guy, where are you? You need to tell me where it's at. Now I got to know, man. My favorite thin crust. Hell eats thin crust. Probably Vito and Nick's, I think, right? That's That's one on Pulaski. You're probably going to want to go to Vito and Nick's down there on Pulaski. It's south side of Chicago. All right. Enough hijinks, enough joking around, and I guess we'll continue it next week. But between you and me, that's what I was gonna say. Before you so distracted me with your pizza comment and made me all hungry, is that when I go on Ryan's and yeah, there's like a couple hundred people in the chat, it gets too crazy, too crowded, too busy. And my fault is I want to engage with each of you and thoughtfully to respond to every comment. And we if there's 200-300 people, it's too hard to keep track of. So I don't know, but I appreciate you guys being here and doing that with me. And sorry, I'm like setting something up, right? I'm like trying to talk and my brain's like, you're overloading, stop. I can't work that hard, especially on a Sunday night when the lights are closing down. It's closing time, right? So this is a blast. I'm just so thrilled any of you come by and hang out, and appreciate it. And I will do it. We'll do it again next week. So so long, everybody. Have a great week. Let's hope for some deals.